We've been speaking to the top bosses of the mutual fund industry to understand their vision, their strategy, and how this industry is going to turn into a big wealth creator for the average Indian. Now, today on the show with me and in our studios, in fact, we have B. Gopakumar, MD and CEO, Axis AMC, and Raghav Iyengar, CBO, Axis AMC. Welcome, gentlemen, and thank you so much for dropping in and talking to us in the NDTV Profit studios. Great to have you here.
Thank you. Thank you. Thank you so much for having us for the shows again. I think it's the first show we are trying to do with NDTV now.
Yeah, and hopefully many, many more.
Yeah, many
now, what we want to talk about today, and let's start with sort of setting the stage for the industry, and then of course we'll come to all the stuff Axis MF is doing. We are at a time where we're seeing record high SIP inflows. We are seeing a record number of folios, and domestic investors, the Indian domestic investor, has really become a voice that the markets cannot ignore. What do you think has changed? Let me start with you, Gopakumar.
I think there is a very structural shift in terms of the way the savings are looked at in India today. I think traditionally, if you look at, India was largely focused on FDs. If you look at new set of investors coming in, I think the first investment is mutual fund SIPs. I think that is changing. In my belief, which I've been in the markets for the last 28 years, and the early part of my career, I think we used to advise customers to put money on FDs. I think that was the whole scenario. I think things got changed pretty fast in 2004, 2005. I think in 2014-15, I think it actually really took off, where people really saw the power of compounding by doing SIPs. I think today the first investment of a guy coming with the first salary is SIP. It's not FDs. I think that is changing. In my view, it is largely structural change in terms of the way the savings are looked at in India. I think that's what is happening in India. So if you look at the last flow, we are having 16,000 crore plus flows in SIPs.
Yeah.
And look at the growth. And if you look at from industry perspective also, we're growing almost, 19% industry is growing in terms of AU.
Yeah.
I think that's a large story.
It's also happening at a time when it's not like interest rates are dipping low.
Yeah.
So the FD option is always there. Gold is doing very well. So it's a very precise choice, or it's a thought out choice to put trust in the equity markets via mutual funds, Raghav?
Yeah, it is. I think in the past, when we started our careers, like Gop and I, we had very few options to put money into. The stock market was in some sense a big black box where a bunch of people got together in the Dalal Street and did something. I think today if you go and really go down to Bharat, and that's visible in the number of demat accounts, the number of trading, and more importantly, the number of accounts that are opening up in the mutual fund industry, it's not an urban phenomenon anymore. It is in some sense a Bharat phenomenon. So even when I go into smaller cities, I think the same thing, it's not a salaried thing anymore. It is everybody wants to participate. The other good thing is that I think the industry has done a fantastic campaign. The regulators really promoted the industry really well. So I think there's an element of safety. People feel comfortable now putting their money, however small, big it is, into MFs. And I think that's a big positive. I think that's the hockey stick, because till about 2010-ish, people were a little worried. You just got over global financial crisis. But I think in the last 10, 12 years, it's just sort of
I think a campaign can take you only so far. At the end of the day, people will look at returns.
Yes.
Do you think that the mutual fund industry has actually delivered on its promise and can continue to? Because now you are a custodian of people's aspirations for their future.
Yes.
So let me give one or two examples, right? One is that Indian investors have moved from a savers to invest. I think that's a large structural change. We completed 10 years in our small cap fund. And if you look at 10 years, small cap index would have gone up and down, right? Today, the 10 rupee NAV is at 91 rupees. Imagine the wealth which was created by the small cap schemes. So there is a clear indications that if you are able to hold on for a long period of time, and if you look at the compounding will work, and people have seen this. Hence, there is a opportunity where Indian markets also is growing. Let us give us credit for the markets also. To the extent, I think, still believe that MF is a great product for retail investors to invest in the markets today.
But why this craze for small cap? And some funds have been a little hesitant to sort of fuel the fire. What is your take on this? And are you seeing that same kind of interest in small cap funds?
Yeah, small cap flows were pretty lumpier in the first quarter. I think idea was that when you look at the small cap index versus the large cap, there was a valuation gap. And that's hence the money started flowing in the small cap. And it was largely also from investors doing into a tactical allocation. From a scheme perspective, it is highly liquid. I don't think there is an issue in terms of scheme, in terms of liquidity, because most of the schemes are having cash levels of 10-12%, and the stocks are fairly liquid. And small cap generally has delivered better returns this financial year compared to the large cap and mid caps. Hence, the money chases the returns.
And do you see that continuing?
We do see there's an opportunity. We see some headrooms in terms of valuation in a couple of stocks and a couple of portfolios. I think my view is that there is still a headroom in terms of the money flowing in a small cap.
Okay. Before I get to the specifics, because I know you guys have had a slew of NFOs and some interesting themes, more in the pipeline, and one interesting theme as well. I just want to get some color on the kind of investors coming in and the trends that you're seeing in the space when we're talking about that hockey stick run. Raghav, do you want to take that on you know?
Well, I think it's an interesting question, Tamanna, because I think now we cater to all types of investors. I mean, initially when the industry started, it was very corporate and it became very H&I focused. Obviously, that's the knowledge part was there. I think today it's a mass movement, if I may call it. And we have a long way to go because we're just about 4 crore unique investors in the industry. So I think when you compare it to, say, some OTB platforms, I think they are 5-10 times our size. So the same gentleman or the same lady who's watching an OTP program is a very, very good candidate for, let's say, a SIP investment. And you see it around you. I mean, all the people technically in the studio are in some sense potential investors for SIPs. So I think that the industry has done really well. One has obviously done education. Number 2 is delivered that very quickly. And I think our partners are also need to take a lot of credit for that, because I think they've done a lot of on-ground activities, education, promotion, making sure the transaction flow happens. And of course, I think like Gob said, it's been a general win-win for everyone, because I think people have made money, partners are happy, investors are very happy. And I think it's a large movement here. I don't think it's going to stop in the near term very soon.
One more point is that technology also helped a lot. For example, today, an investor has to put money in mutual funds. He has a number of options to go through platforms, right? Earlier days, he has to go through a proper sub-broker or a couple of guys, banks. Today, it is well democratized across. So digital also actually helped us to reach Bharat. I think a lot of credit to all the digital platforms what is created. I think, and the digital platforms actually created networks also. I think that networks also helps to get into the more of Bharat today. Nice?
Right. We were speaking before the show, and you guys have been on road shows for your new manufacturing fund. Can we start by just understanding a bit about it and what the strategy and what the rationale is there?
I think if you really look at from a manufacturing as a team, I think it's very structural in India. I think it happened from 2014, and if you really look at the couple of call-outs of 5 trillion economy, we called out 5-6 sectors. I think manufacturing will play a key role. So if you look at pre-pandemic GDP, for example, we are contributing 16-17%. If you look at this quarter number, GDP number, we are almost 13% contributed by manufacturing. I think that story is very structural in terms of the way India is moving to manufacturing. More importantly, I want to talk about is that manufacturing as index versus the Nifty index. Today, Indian investors are overexposed to typically BFSI and the IT. The manufacturing index doesn't capture that. So, for example, when I said it is very structural in nature, in the sense that you get an opportunity to invest only in manufacturing companies. So it may look like a thematic fund, but it gets exposed to 11 sectors, 66 industries. So it's very, very broad-based. Purely from a AMC industry perspective, and look at and say that most of the manufacturing companies are underowned in most of the schemes. We are extremely overowned on the BFSI and IT and ITS, and some extent to the consumer.
Just to understand, so then for investors, there are always options like flexi cap. Why should they go in for a targeted scheme? I mean, today, if you are talking to investors and potentials, so you have enough funds which give you some flexibility on whatever is working. Why should someone come in specifically on a manufacturing bet?
It's a bit of the risk also, Tamanna. See, this is a thematic fund. A flexi cap is if suppose you were to ask me, here's the gentleman who's doing my makeup, which scheme would you like to recommend to him, or which scheme would you like to suggest to him? I think the idea is I would say flexi cap, because in some sense the risk quotient of that fund is much lower. This fund is a thematic fund, so in that sense it is a little riskier than a broad-based fund, because like Gop mentioned, a couple of sectors are not getting enough exposure in this fund. But there are a set of investors who are very happy to capture new themes. I mean, there are people who've been investing for some time. They want to participate in something which they see as a good potential return in the future. And I think in some sense, as a fund house, we have to offer options to all our partners, all our investors. So this is just complementing the offering.
Okay.
So you're right, you can put it in a flexi cap too, but the idea of a flexi cap risk portfolio and a manufacturing portfolio is slightly different. So and obviously the return perspective will be very different also.
If you really have to capture, say that the manufacturing theme is a very structural, multi-decade in terms of the way India is moving. If you look at all the schemes what government of India has given, whether it's Make in India, PLI, Atmanirbhar program, actually is creating that change. If you really look at 90s, what changed us is IT, ITS and a couple of, because we had a manpower arbitrage in place. But today manufacturing is real in the sense that if you look at number of companies putting additional capacity, if you look at private capex is looking much better now. I think there is a structural story happening. So in that sense, my view is not largely thematic in that sense, because we are participating for a 5 trillion economy, what government called out in 2027, and if that's the reality, it's going to happen, manufacturing will play a larger role. And it's going to be a multi-decade change what's happening in the country today. And this fund actually really captures that.
Do you have more in the pipeline in terms of thematic funds? Anything you can share with us on that? Because you've set a steep target, isn't it, for the next 4 or 5 months of an AUM? 3 lakh crores is somewhere I read. Is that the target? And can you explain what is the path to get there?
So interestingly is for us, as a funders, we don't like thematic funds. I think we have always kept ourselves and saying that if there is investment thesis, we will do it. So if you look at most of the funds, we don't have a thematic at all. But largely, even though we want to do thematic, we are largely do an ETF side. That's one thing. As of today, we are around 2,65,000 crores. And very interesting is that the way our AMC is structured today, we are 60% large cap and 40%, 60% equity and 40% fixed income.
Okay.
And most of the industry players are 70-30. So we have a large headroom in terms of our fixed income portfolios today. We crossed 1 lakh crore now in the fixed income. We put almost 19,000 crores for the last 7 months. So that's a great story for us. And we do believe that we have been a subsidiary of a large corporate bank. We have a large headroom. I always said that our rightful market share is lower on the fixed income side. We continue to have a fair good of market share in the on the equity funds. Today we are number 4 in terms of our equity funds in the industry. I think my belief is that the headroom is coming from the fixed income side. I think we do have stretch targets there. I think 285 to 3 is possible for us to build on.
Okay, so why the bet on fixed income as a theme, as an investment bet? Do you think that is going to fire from an investor's point of view?
Yeah, investor point of view, yeah. If you look at our track record, we're extremely, if you look at last 14 years of AMC, we have a fantastic track record. We never got into any issues for almost, 14 years. 2 things drives us. One is quality. I think we are very, very quality focused. And we also call it true to label. For example, if we commit that we are going to have a AAA papers, we don't even move away from that investment philosophy. So these 2 things are getting large credibility for us to get industry flows. For example, we just concluded our FMP series. We collected almost 610 crores in the 100-day FMP series. So I think we are launching our US Treasury Fund now. We're closing on 20th. So we do think that we have a capability of innovating a couple of products on the fixed income side.
Okay, so the big push is going to be on fixed income.
Yeah.
Okay, we're going to take a very short break, but when we come back, we'll get the view on markets in 2024. What are going to be the big themes and the big ideas? Stay tuned. welcome back. You're watching the Mutual Fund Show, and with us today is the Axis AMC top team in the studios, B. Gopakumar and Raghav Iyengar. Gopakumar, let's talk a bit about the new team. I mean, there has been a bit of a reshuffle, and has there also been a change in strategy, philosophy, vision, or that stays the same? More focus now on internal surveillances?
Yeah, I think we are a large change. I spent 7 months now. I think we have also new CIO, Ashish Gupta, has joined us from Credit Suisse. We had some changes in our senior management. We also have a new CRO, new CFO. We also had a new head legal and compliance has joined us. I think more importantly that we have put much more in terms of risk and surveillance as well as the compliance now. I think our belief is that we are in best in class now. I think having said this, we have not compromised the independence of the fund managers to operate, because sometimes what happens, we go to one extreme of compliance, there are chances that you may tie hands of the fund managers to perform. I think that independence is really given. In terms of philosophy, we continue to be a growth and quality focused strategy. Having said that, what we are looking for a large change is that as a platform, we should give different styles. There are typically a growth and a value style. We do have a small fund on value fund. I think one of the reasons we are trying to look at how we can scale the value. More important also that one of the areas we are not largely present on the hybrid side. So that is one change we are doing. As a platform, we want to make sure that we give investors all different styles, and there are ability for a distributor or advisor to pick up and advise a set of customers. I think that's what we are trying to do. I think this is a large change in terms of strategy, but our top funds continue to be a value and the quality and growth style that will continue. One of the areas which we are also improving is that we were known as very concentrated portfolios we used to run. Today we are much more diversified. We have cash calls are much lower today. I think in that sense, that's a change what's happened today.
Yeah. Was it sort of you came in at I would say, an interesting time for the company? Challenging time for the company. After a few months of flux, do you think things have settled down now?
Yeah, quite settled. I think challenging times gives an opportunity for us to relook at our organization. I think largely large transformation. I think a lot of focus also on the digital side today. We run our own app, which is a 4.6 rated in both Play Stores and as Android store. I think we've done fairly well on that side, on the DedX side. We do work with one of the top fintechs. We cover almost 50 fintechs now. And fintechs is also, actually, we are almost have 18% market share on the fintech side. We do now work with the digital banks. I think that's a new change in terms of distribution. So we work with, so we do have so much of knowledge on working with fintech. I think we work very, very closely with the digital bank, helping them to look at their UI, UX. I think that's the change. So we do have now separate practice for digital, which helps these large fintechs and the digital banks to look at how do you acquire customers, how do you take them the full journey. I think that's what we are trying to do. I think one more area which we are working on investor education side. I think if you look at, we ran a campaign on the risk profilers. I think this was less spoken in the industry. Mostly, most of the investor education programs are focused on fund selections. We went through saying that we will educate investors in terms of what risk they're taking and how they should use riskometer, why they should do asset allocation, why they should do financial planning. I think these are the areas which we do believe next 3 years we'll work on the investor education program.
Yeah. Investor education, I think, is still a huge leap.
Yeah.
People now know that they have to invest in mutual funds, but what exactly, how, what does it do for you is still very much there up in the air. I just want to turn to what is happening in the markets right now and in the industry.
Yes,
sure, of course.
We did a small survey before we did this campaign. That's typically to figure out whether we are in the right direction. It's quite astounding actually. More than 50% of the people don't have an idea of their goals or their risk.
Yeah.
They're just putting money, right? And I think that's what the campaign was trying to address. That, hey, use a risk profiler to get your individual risk and use the riskometer to marry those two risks, basically. And then once you're there and you know that you selected the right fund given your risk profiler, and then I think just enjoy the journey after that. I think that's sort of been it's very well received in the media.
Two ways to look at it also from the investor education, that are you asking the right questions to your advisor? And there are set of DIY customers also.
Yeah.
I think these two things are very, very critical. I think that's what we're trying to say, that how can I empower the investors to take a right decision. That is the platform what we are working on in terms of our investor education.
Okay, let's turn focus to what kind of close to 2023 we're going to see and to 2024. This is in the second week of December that we are having this conversation, and there is euphoria. I would say there is positivity, optimism as far as the Indian markets are concerned, but there is still a large cloud of we don't know what will happen globally. That US recession, no recession, all of that is up in the air. For equity investors, whether through mutual funds or directly or anywhere, what would be your outlook?
See, we're heading to a too large event. One is the budget is going to come up, and we've got elections coming in, I think. Yeah. Somewhere there's a consensus post assembly elections that this dispensation we can come back and there will be a certainty in terms of whatever reforms we are going through. I think in that sense market is much more upbeat. Then you need to look at and say that whether corporate earnings is supporting where the index is today, right? I always said that the Nifty as an index may not be a clear picture in terms of what the markets are projecting because how the index is formed. Having said that, if you look at the Q2 earnings, you had double-digit corporate earnings, which is, if you look at most of the companies, when you look at, there is some level of re-rating in some other pockets. When you look at from an index perspective, you are what? If you look at from an earnings perspective, index earnings perspective, we should be at 980 rupees, we should be at 23 times the FY24 earnings. But if you are really looking from an FY25 estimate, because we are there on a 1 year forward discount, we should be at 19.5% because we should do around 1,200, 1,300 in terms of Nifty. So in that sense, I'm not saying that we are very, very expensive. We are there. My view is that the corporate earnings, the way the Q2 looks like, and a GDP number, if in a full year basis we get 6.7, I think we are ready to a great markets for next 4 quarters. Yeah, that's our estimate.
Just a take that I want on what's happening in the primary markets, and sometimes the bets that, I wouldn't say bets, but the investments or the decisions that mutual funds make get a lot of scrutiny because it's Janta's money, right?
I know what you're referring to.
And then, so I'm not going to take any names because we have, I think, a flood of IPOs. This is a market where everyone wants to, cash in. How do you ensure internally that you're picking or you're betting on the right horses?
See, there are a number of reasons when you look at an IPO, the way we look at today, the way the IPOs are going, we hardly get allocations. Even though you're institutional investors, we hardly get anything. So if you look at our recent investment, hardly nothing. Whether it's Tata, the recent one,
I'm sorry, I just have to say that when people didn't get Tata Tech allocation, they were saying, Acha, I hope my mutual fund has it.
We also don't get allocations because it's a very small allocation. Because the size of the funds what we manage, I think to a relative basis we are small. But when we do look at the pre-IPOs, when they come to us in a QIP, we really look at from a channel check perspective, and that's a call we try to do. And the intention is to make returns for the investors. So in that sense, we make sure that all the tick boxes are done, and it goes through a real full process. Ultimately, when we take a call, it goes through a proper investor committee. They come and justify the valuations.
So what is the acceptance rate generally of the IPOs right now? Out of every 10 which are coming your way, how many are you going in for?
See, if you look at, we only participated, if you look at last 10 IPOs, we only participate for 4.
Okay. So you're being a little cautious.
Yeah. Because there are a lot of small cap IPOs that come in between. So we also know that we don't get allocations. So there's simply we put a lot of effort into research and we don't get any allocations. I think waste of time. And we will see that once they mature 2 or 3 quarter results, then we'll get into it. But as of now, we kept away from a number of IPOs now.
Any you want to name that you kept away from? I tried.
Disclaimers.
Disclaimers. All right, last word from you, Raghav, before we wrap up. What is 2024 going to look like?
I think it's a buoyant year. It's also an uncertain year for all the reasons that we all know about. 30 countries are going in for elections. It's not only an India story. There's US, there's a lot of other smaller, bigger, larger data. And the world is slightly riskier today as compared to 2023. So keep that in mind. I think the industry will grow quite well from here. I think we are all pretty much geared up to watch for the mistake So hopefully we won't make any serious mistakes. So we manage investor wealth, it's not our own. So I think it's going to be a great year for the industry. I think as far as an investor is concerned, or just saying that, hey, look at your asset allocation, make sure that you're not stretching your risk limits too much. So go back to our risk campaign, know your risk. In fact, do it again if you can every quarter, because the markets are very different every quarter. See whether your risk tolerance is fine, and then just keep investing and enjoy the journey.
All right. Hopefully the journey will be enjoyable next year as well. Thank you so much to both of you for coming to our studios and for this lovely conversation.
Thank you very much. Wish you all the best.
Tamanna. Yes.
Thank you so much.
Thank you so much. Well, that's it for me on the mutual.
Benchmark indices trade in the green. Nifty about 21,400. Sensex is higher at 71,500. Broader markets marginally outperform.